OTIC, Otonomy Stock, pumps 133% for the day. And I'm going to show you how to analyze it. Time to get focused.
Time to get focused with Focus on Investing.
Welcome to Focus on Investing, where I teach you how to do technical analysis so that you can make money in the stock market. We release these videos as soon as we record them. So if you received a notification for this video, then this opportunity is probably still available. If you do not want to miss out on any opportunities, make sure you go ahead and hit that subscribe button and hit that bell icon so that you can be notified. If you want to join me in preparing for 2023 and having a successful financial 2023, then make sure you go over to focusoninvesting.io, where we're preparing for making ourselves a financially successful 2023. All right, with that said, let's get this party started. And today we're looking at Otonomy Inc. That's pumped up. So, the first thing we want to do whenever we're looking at a stock or any type of asset is, price is always the best indicator, right? And the first thing we want to look at is what's the overall shape of this asset. And we can see that, there is no bullish or bearish, trend or, overall bias on this thing. If we draw our arrow here, we can see that the overall shape of this price is basically straight across. If we bring in our channel, let's take it from our support and resistance lines, which are always useful. We draw it here and pull it down. I mean, where you want to stop, if you want to stop it here or here at this pivot line, but let's go for this higher one. We can see that price is basically here, down out of the channel. But if we look overall at the price movement, it really is the bottom of the channel, goes back up, comes back down. You can say really it's just a whole big sideways movement. I can't see any rise down or decline down to say it's bearish. So basically we're just looking at one big area of consolidation. It's what we're really looking at.
Consolidated with the quickness.
So this consolidation indicates to us there's no real bias of bullish price movement or bearish. And as trend traders, we always want to ride the back of the animal, whether it's bull or a bear, to glory or to victory, right? And here there is no bias when we're looking at price movement. But interestingly enough, we can see here that there's a big gap down in price. We see this big gap in price where, this generally indicates that there was a decline in price when the market was closed. And then even when price reopens, we're still getting this sideways movement again. Let's look at this channel, draw a channel. If we draw a channel here, we can see again, price is just within this channel. So again, more consolidated sideways movement.
Sideways.
Right? So it's different if price had, see this little string here, where you've got this red string of candlesticks. There's actually a trend going on. Prices moving in one direction. So we could at least say for this little part, there was a bearish trend, right? But because it gapped and went flat again, it'll trend. So, another tip for these charts is they always scale to whatever's in the picture. So, it doesn't look like there's much price movement here, but as we zoom in, we'll see that the scale, scales to the screen. So you're gonna see a big jump all of a sudden as this top area moves out of the screen, and then we get a better look at later price movement. So there we go. You see that little movement here popping up. So this gives us more detail in the smaller time frames where it looked like it was just flat before. We can see a bit more added price movement. So we're looking here again, same story with this gap down, which indicates, a lot of price movement when the market is closed. Again, there's no steady bullish price movement in any kind of slope. It's just straight and then gap, straight and then gap. So again, let's get rid of this arrow, and then let's bring the resolution closer as we wait for this to move out of the screen. You're going to see it pop up. There it goes. It popped up. You see it there, this right there, it popped up. And even when we pop up, we can still see that price is still in this sideways channel, right? So if we draw it from maybe even here, we're still seeing a sideways channel with price, right? So again, still indicating to us that there is no, trend happening here. There's no upward trend. There's no downward trend. It's just sideways across and then gap down, sideways across and then gap down. And the reason why we like technical analysis is because, whatever price has done in the past, it's likely to in the future. And again, if we quickly zoom out, we can see that the history of this price is to move one there's anymore. I think this is the beginning of price. All right, so we can see that price. Oh no, I think there's more price here. Yeah, there we go. We've got more price here. So historically, again, even if we go further back, this is why I love technical analysis, because if we look at the past and understand its pattern in the past, it will indicate what it would do in the future. So my internet is a little slow, so it's taking a little time to load. But let's go for, okay, so here's the beginning of the chart. We see here-ish price movement, but we see a gap here. Then mostly sideways. After sideways, a gap down, and sideways again. This whole price area is a bit more price movement, but if we draw this channel here, again, it's one big sideways movement. So this is what this chart likes to do. After the sideways movement, it gap down. Sideways movement, gap down. We come to more close times. In future, what do we expect this price movement to do? Expect movement of price. Then if we look at so that's our first indicator of price. I think that is moving averages. And because we're getting such big gaps, we can't even see the triple moving average here. Where is it? Let me pull it. There it goes. And because of these massive gaps, because I'm getting line movement, so that generally trades alongside of our moving averages. Looking at past, as we're going alongside gaps, which means it will gap below the moving averages, and then eventually the moving averages will catch up, and then it will trade alongside it. So you can see here the 200 simple moving average. So the 200 simple moving average is lagging behind it until it moves sideways for a significant amount of time, for a time under the 50 simple moving average, and for even shorter time under the 20 simple moving average. So again, the moving averages are indicating, again, sideways movement, really. Even though we have this brief moment of bearish activity, looking at sideways again, because price is trading alongside in alignment with these moving averages. The next thing that we want to look at is, if we bring the price back again, the next thing that we like to look at is our special focus on investing indicator, which is our trend filter. Now, our trend filter gives us a quick look at price and lets us know whether the trend is either bullish or it's either bearish, right? So let's remove our channel, and then let's bring in our trend filter. Again, this trend filter could be accessed at Focus on Investing, and the trend filter will tell you straight away if the trend filter turns all of the candlesticks red, that means it's bearish, and if it turns them green, that means it's bullish. So we can see that overall, as it moves sideways, we're having really a bearish trend, but we have this one candlestick that's risen up over the past day, and this particular candlestick is bullish, and we can see that because it's got massive growth. So, another indicator of bearish price movement, or really it's sideways, but what it is, it's gone bearish and then gone sideways as a bearish trend. So it's maintained its bearishness on the trend, right? So if we remove our trend filter and look at our bars or candlesticks, we can see that it's mostly, again, bearish in the candlesticks, mostly red candlesticks. The odd green candlestick is popping up. I wouldn't even say it's a bull and bear fight because, you know, it's not really back to back. It's basically mostly red with the specks of green. And then we over and top and gapped up again. This chart likes to gap. So it appears it has strong price movements overnight. And this price movement or this candlestick is risen up above our 20 simple moving average, which is here. It's gapped up above our 50 simple moving average, but we're still yet to hit our 200 simple moving average, which, as we saw before, is well above price. And if we look on more of a finer scale, we can see that our pivot support indicator is trading above price again. You know, this is because, you know, when we've moved sideways, we've established certain pivot levels, but then when we gap down, we've gapped down below these pivot levels. So this pivot level is a good indicator of where price might rise to. We can see that price roughly went where this support level is, slightly above it. But remember that the support and resistance levels are just areas, they're not specific points, right? So, you know, we can see that again, price is moving sideways, so that would indicate bearish. We can see that, you know, price in terms of the candlesticks are mostly red and bearish. So that again indicates bearishness. And then we're trading below our pivot support area. So that would also indicate bearish. So even though we're up 130% for the day, remember, we're not including the gaps, it would be 113. So the actual last indicator of, you know, candlestick would be bullish. The overall trend is bearish, right? So ideally, we would like to see alignment between the overall shape of price, the moving averages, the individual candlesticks, and our pivot support and resistance levels. But unfortunately, we do not have that. We have a bullish final candlestick, but our overall price trend would be either sideways or bearish. So you would say that the bears win for today.
It's good, and the Bears win it.
But as we do not have alignment, it's not an opportunity I would be looking to invest in. The only way to really invest in something like this will be as a pump and dump strategy and really try and catch this, you know, catch up the way up or catch up as on the way down. Right? But it has already. So if you want to learn how to, you know, spot these opportunities before they break out and get invested and ride it on the way up, then go to focusoninvesting.io. They will teach you how to identify trading opportunities, as well as give you in-depth you know, training course on how to read all of these charts, and you get the opportunity to get your hands on all of our indicators. So again, that's focusoninvesting.io. If you want to see more technical analysis of various stocks, cryptocurrencies, commodities, or forex pairs, then check out either of these videos on your screen. Thank you for joining us, ladies and gentlemen, and take care.